Vivek. I will just make you the host. Just a moment. Great. Vivek, I request you to share your screen. And meanwhile, welcome everybody. Thanks a lot for joining us yet again in our monthly Ask Me Anything session with the manager. Very happy to have you all here. As you would know, Vivek is the investments head at Gulaq at ST Advisors, and I am a growth and business development manager at Gulaq. So we welcome you to the webinar today. Okay. Vivek, I can see already lots of questions are coming in. That's good news. But let's start with the presentation for today. I'll quickly do some introductions about our company for the people who are newly associated with us, and then we'll talk about the rebalancing activity that happened this month. After which we can take your questions. Yeah, Vivek, would request you to move to the next screen, please. Yeah. Okay, about ST. So ST has been the number one firm in, one of the number one firms in systematic investing in India. We make investment decisions using computers and analytics and execute everything using computer science. We have our own portfolio management service for HNIs, which was started back in 2009. And we have been going very strong with it. We have an AUM of over 1,500 crores so far. Back in 2020, we thought, why not offer these services to our retail audience also, who have a lower ticket size. So we came up with this idea of Gulaq, where we started offering portfolios with a minimum investment amount to be as little as 24,000. So Gulaq has been live since 2020, and we have served more than 20,000 clients till date. This is part of our team. Sandeep is the CEO and founder of ST as well as Gulaq. You would have heard him in the previous webinars. He's an alumnus from IIT Delhi and MBA from Columbia Business School with 30 years of experience in the capital markets. Vivek is the investments head. He's an he's a BTech and MTech from IIT Kharagpur and has 20 plus years of experience in trading. He was also leading teams at Futures First previously before joining ST. And myself, I'm a business manager at Gulaq. I'm an MBA from ISB and I have 6 years of experience in the financial services industry. So just these were just 3 of the key members of our team, but there are a lot of other people who are working behind the scenes in different divisions. Apart from that, of course, disclaimers. Being a registered investment advisor, ST is required to share with our investors all the risks that are associated with being a part of the capital markets and investing in the capital markets. So I would urge you to go through all these details about us and all the disclaimers that we are displaying on the screen at leisure. You can rewind the video. This is recorded on YouTube. Now, coming to the rebalance update. So, just for people who are new and who are not too aware of what the investment philosophy of Gulaq is, I'd like to share a little bit about it. So we create sector agnostic portfolios, which are based on multi-factor algo-based strategies. So what do I mean by multi-factor? We are not focused on any one theme, any one sector, or any one factor. By factors, you could mean value, growth, momentum, etc. We look at all the factors out there, and these factors would be part of 3 broad themes, such as fundamental factors, technical factors, and macroeconomic factors. And based on all the 130 plus factors that we study, with a lot of data that we capture, like lakhs of data points we capture from different sources, from Bloomberg, from Morningstar, etc. So based on all the data that we capture, we figure that which are the best sectors or themes that will work in the current economic regime. This is the analysis that our algos, which basically means our computers, our systems, developed systems do every month, based on which we pick out the best sectors for that month and then drill down within each sector, again based on data, to pick out the best stocks. So that's the basis on which we pick out the list of stocks that we give to you in our rebalancing update. That is the methodology behind it all. And like I said, we are sector agnostic. So we do not focus on only one sector. We look at all the sectors and then analyze for you which is the best sector. Now, based on that, if we see what is the market capitalization split of our portfolio, you will see that as compared to last year, we have increased our weightage towards large cap and small cap stocks, and we have reduced our weightage towards mid cap. Moving to the next slide, if we have to talk about sectors, you will see that consumer staples was the number one sector. It still is, but we have reduced it by almost 40%, So 20% weight we have taken out from consumer staples and also from materials and from IT. And we are more bullish this time on energy, on consumer discretionary, on financials, healthcare, and utilities. These are the sectors that we are focusing on, along with the three sectors that we were previously also focusing on, just that we have reduced the weightage towards that and we have made our portfolio a little more diversified. We have entered into other sectors as well. Talking about the factors that I mentioned a little while ago, of course, till June, you would have seen that we were very bullish on momentum. The markets were going up and momentum was working pretty well for us. In fact, a lot of investors also thought that we are a momentum-based strategy, but that's not true. Because, as you will see, we study all the factors, and from July onwards, we've removed momentum completely. We are focusing much more on quality and also considering leverage. And if you want more details on what it means, please feel free to ask questions. And in the Q&A section, we'll be happy to answer if you have any questions on whatever I've shared so far. Yeah. Okay, so this is again for people who are newly associated with us. We offer 4 portfolios currently. Gulaq Gears 6, 5, 4, and 3. These are all having different levels of debt and equity compositions and are suitable for people with different levels of risk tolerance. So you will see that Gear 6, just like the highest gear of a car, has 100% equity. That's for the risk takers. Then we come to Gear 5, Gear 4, and Gear 3 has 40% equity and more weightage towards debt. So these are all the 4 portfolios. And we always urge our investors to take a risk survey, which is available on our website also, gulaq.com. See what their risk tolerance levels are, and then invest in the portfolio that is matching their levels. So that has always been our recommendation. Now, coming to the returns for people, we got a lot of questions asking for the returns. So here they are. You will see that the second column where we mentioned Gulaq Gear 6 returns are our actual portfolio returns for different periods. And the rightmost column mentions the alpha. So how much we have given over and above the benchmark. That shows all these details. The next couple of slides will talk about all these portfolios. So Vivek, if you can just quickly go over the other slides. This is for Gear 5. Then we'll have Gear 4 and also Gear 3. And then in the next slide, we have a consolidated view for all of these. Of course, the benchmark multi-cap, the rightmost column in this screen is the BSE 500. So this is the best, this is more suitable for comparison with Gulaq Gear 6. Because Gear 6 is also 100% equity and the benchmark is also 100% equity. For the rest of the portfolios, a hybrid benchmark would be required if you want to see the accurate alpha. Again, a little bit more. This slide just explains that, if you invested 100 rupees when Gulaq had gone live in May 2020, with the multi-cap index, your 100 rupees would be 314 today, which is a CAGR of about 31%. And with Gulaq, your 100 rupees would become 765, which is a CAGR of almost 60%. So this is just, you can always rewind and, you can look at all the details shared so far. Coming to the blogs, we write a lot of blogs, a lot of interesting topics that we publish and talk about. I think, Vivek, your screen suddenly stopped showing for me. Yeah. So, like I was saying, we post about a lot of interesting topics. The second one is extremely interesting. So this you should definitely give a read, which is how investors lost money in Peter Lynch's fund, even when the fund was doing really well. So do give a read to these blogs whenever you get time and if you're interested. It's, as you can see in the snippet on the screen, in the screenshot, the website is gulaq.com and you will find the blogs section where you can see all the blogs, even the ones that we published in the past. Okay. Moving on, Gulaq upgraded. Okay, so we've done some changes to Gulaq portfolio. We've been talking about that we've reduced churn. We've been talking about other things. So all these changes we have finally made in our portfolio in the September rebalance. It's a fresh portfolio, and Vivek will be talking more about it. Yeah.
Okay. Thanks. Thank you, Eesha. So these are the changes actually. This upgraded portfolio, we are trying to make it better in every sense, be it in terms of returns or risk or even the churn. That's what our aim was. We have been working and we have been informing you guys that will be coming out with this. It has taken quite some time, but here we are with the new portfolio. So these are the following changes in terms of concentration. Earlier, we were having about 12 to 13 stocks in average in Gulaq Gear 6, whereas this new portfolio would now typically have about 36, 37 stocks. So almost becoming 3 times larger. The churn actually goes down quite a bit, so almost half. So till now, our average monthly churn was about 90%, which will come down to about 50%. So lower churn means lower transaction costs, lower slippages. Volatility, in terms of volatility, again, because it is much higher in terms of number of stocks, more diversified, people should expect lower volatility in this. However, the returns in this actually are higher as compared to the earlier model that we were running. So the risk adjusted returns are becoming even better than before. So this is as per the back test, what we were running earlier, Gulaq versus the Gulaq upgraded. So if you can see, this is over the last 4 years or so, since May 2020 that we launched, and the overall CAGR, there's been substantial, almost 10% improvement. Now, having said that, again, these are back-tested returns, and you shouldn't really expect that returns would actually go up even by 10%. But overall, this just gives us some sense of what to expect from this portfolio in terms of risk, returns, and the churn. Yeah. Uh, and in fact, this is not something very new also to us, because in PMS, this specific model we have been running for quite some time. And that is why if you see our PMS returns, which is even much more diversified, it has almost 80 to 90 stocks. That has been last 1 year performance, and that has been almost at par or even slightly better than Gulaq Gear 6 also, because that part had already included this upgrade, whereas in Gulaq we are now upgrading this model. So overall, it's not that it's something very new for us, and we have been actually running it live in PMS. Okay, so I want to touch upon a few points here, which were some of them were sent by our investors also. So one of the things that people say is, to generate alpha, you need a concentrated portfolio. Now, Gulaq with even higher number of stocks will fail to generate. In fact, this is the totally opposite of what we have been able to achieve. So I told you in long alpha, last 1 year returns actually has been better, even with almost 100 stocks, and at times it has had even 110 stocks in its portfolio. And last 1 year, it has actually generated, after costs, higher returns than a concentrated portfolio. So it's not always true that you need to have that concentrated portfolio to generate alpha. In this newer methodology that we are now moving to, it will have better quality alpha, which means much more consistent returns, much more consistent alpha, right? So this is just a myth. Secondly, a higher number of stocks will lead to higher transaction cost. Again, this is not really the case, because obviously number of stocks is higher, but in terms of our factors that we have been using, we have changed that quite a bit. We have made them lesser sensitive to the short-term data, and what that will lead to is, if they are less sensitive, they'll change much lesser, which will actually lead to the overall portfolio also changing much lesser, which means the churn actually comes down quite a bit. So even though the number of stocks have increased, the average monthly churn and our transaction cost slippages would actually, people should expect that to come down. Yeah. One of the question is if this is a permanent shift in the strategy. Yes, this will be permanent. We have been, as I've told you, have been testing it for quite some time now, and we are very confident about this being a much better methodology than the earlier one. And again, this is not something very new. We have been running it with live money in our PMS for some time now, right? Will the upgraded strategy increase the minimum investment amount? So no, this will not increase the minimum investment amount. Is there a cap? So no, again, there's no cap on the sectoral weight as per the new strategy. If anything, we are going to see much more diversification, even in terms of number of sectors being represented. So earlier we might even have maybe all the allocation to 4 or 5 sectors, and this should also now increase to maybe 7 to 8 sectors. So yeah, but there's no cap on the sectoral weightage. How does this new strategy affect short-term capital gains tax? Again, I don't think it will impact the short-term capital gains tax. Even earlier, all of our profits were under STCG, and in the new strategy also, it will be coming under under STCG only. Right. Another question is, I am an aggressive investor who prefers a concentrated portfolio. Now, again, I think here this question is coming from the myth, the first thing that we mentioned, that a lot of people consider that if you have a much more diversified portfolio, it is impossible to beat. And the only way to produce alpha is to have a concentrated portfolio, and which is not correct. We have shown that in our PMS also. That is not necessarily correct. In fact, most of my time when I talk to PMS investors, most of my time is actually spent on explaining this specific thing only, that even with 100 factors, we have produced almost double the returns of BSC 500. So people are really surprised, shocked by that. They want a concentrated portfolio just because they want higher returns. But if we are able to produce those higher returns with these diversified portfolios, then why not, right? So again, this is just a myth. Uh, and if you are an aggressive investor, it will still be meant for you because the returns or the risk adjusted returns expectations should go up. Right? Is the shift from a 10 to 15 stock portfolio to 35-50 stock portfolio a defensive move in response to the heightened market uncertainty? So no, this is not dependent on the current market conditions. As our older investors would have been aware, we do not do anything to looking at short term, what is happening at short term in the market. So this is definitely not a uh, move to tackle this uncertainty in the market, which will always be there. And this is not an attempt to make our portfolio more defensive. This has been we have been testing this for a while now, and now is the correct time. We thought we have become confident of rolling it out in our Gulaq portfolios as well, and that's what we have done. Yeah. So those are the questions. We got a few questions, Eesha, in the AMA also in the
Yeah.
Google Forms. But should we take these, or are there any other questions that you want to take earlier?
Yeah, Vivek, I want to take some questions from the chat because regarding this upgrade to the Gulaq portfolio, there have been tons of questions. Some
Yeah.
of them you've already answered because they are repetitive. Maybe हम कुछ questions को हिंदी में भी answer कर सकते हैं. So जो आप क्योंकि कुछ लोगों ने लिखा है कि हिंदी में भी आप समझाइए.
Sure,
तो
definitely.
आपने फर्स्ट 2 questions का आंसर किया था. लोग यही पूछ रहे हैं बार बार कि क्या ये एक म्यूचुअल फंड बन चुका है. क्या इससे बेहतर है म्यूचुअल फंड में इन्वेस्ट करें, एंड रिटर्न्स कैसे, रिटर्न्स तो अब कम हो जाएंगे गुल्लक पोर्टफोलियो के. तो ये आप ऑलरेडी एक्सप्लेन कर चुके हैं इन इंग्लिश, बट मे बी वी कैन एक्सप्लेन दिस इन हिंदी ऑल्सो.
डेफिनेटली आई थिंक ये एक काफी इंटरेस्टिंग पॉइंट है, और जो बहुत ज्यादा लोग यही सोचते हैं कि एक डाइवर्सिफाइड जितना ज्यादा डाइवर्सिफाइड पोर्टफोलियो होगा उतना कम रिटर्न देगा. एंड आई कैन मैं ये लास्ट 1 साल का ही मैं आपको बता सकता हूँ कि जो हमारा पीएमएस है, एवरेज 80 से ज्यादा स्टॉक्स होते हैं, ऑलमोस्ट 90 to 100 स्टॉक्स होते हैं उसमें. ठीक है. और हमारी गुल्लक पोर्टफोलियो में रफली एवरेज 12 स्टॉक्स रहे हैं लास्ट 1 साल. और अगर आप लास्ट 1 साल के रिटर्न्स देखते हैं तो पीएमएस में रफली 75% बना है और गुल्लक में भी रफली इतना ही है। बट द डिफरेंस इज कि गुल्लक में जो स्मॉल केस पे रिटर्न्स शो होते हैं उसमें कॉस्ट इन्वॉल्व नहीं होती। कॉस्ट लाइक योर स्लिपेजेस, योर ब्रोकरेजेस, एसटीटी एंड अदर कॉस्ट, वो उसमें इन्वॉल्व नहीं है। तो अगर आप वो उससे डिडक्ट करेंगे तो डेफिनेटली पीएमएस की परफॉर्मेंस काफी बेटर है एक बहुत ही कॉन्सेंट्रेटेड पोर्टफोलियो से। वी हैव गिवन 75% रिटर्न और लास्ट ईयर आई थिंक बीएससी का कुछ 30 to 40 के बीच में रहा होगा। तो जो एक अल्फा है, जो डिफरेंस बिटवीन बेंचमार्क और हमारे पोर्टफोलियो का रिटर्न है, वो काफी सब्सटेंशियल था इवन इन पीएमएस, जो कि एक 100 स्टॉक का पोर्टफोलियो है। तो दिस इज जस्ट अ मिथ दैट a higher diversified portfolio would lead to much lesser returns. I do not really agree with that, right? So it is just a myth, right?
राइट। तो हम
Yeah,
कह रहे हैं कि की टेकअवेज आर दैट ऐसा जरूरी नहीं है कि अगर डाइवर्सिफाइड है तो इसका मतलब रिटर्न्स कम ही आएंगे। वो हमने दिखा भी दिया, मतलब फ्रॉम द बैक टेस्टेड रिजल्ट्स
exactly.
हम देख सकते हैं ये। एंड
Yeah, not
सेकंड,
only in back test but in live also, as I've told you कि PMS में जो हमारे returns आए हैं they
राइट
are much better and उसमें मेथोडोलॉजी जो यूज हो रही थी पीएमएस में, जो हमने अभी गुल्लक में चेंज किया है वही सिमिलर मेथोडोलॉजी, तो वो चेंज हमने ऑलरेडी पहले से ही पीएमएस में इम्प्लीमेंट किया था and the results are there for everyone to see.
राइट।
These are actual live results.
एंड द सेकंड थिंग, जो दूसरी चीज हम कह रहे हैं वो ये है कि चर्न हम कम कर रहे हैं, बिकॉज वन पर्सन हैड आस्क्ड दैट वी विल जस्ट एंड अप पेइंग डीपी चार्जेस, क्योंकि आई थिंक सेल ऑफ ईच स्टॉक में
Yes.
चार्ज लगता है।
So
बट
हाँ, तो डीपी चार्जेस इज वन थिंग which is not dependent on AUM. तो उसमें उसमें आई थिंक डेफिनेटली जो जिन लोगों की कम अमाउंट है, लेट्स से कि 50,000 60,000 उस ऑर्डर का अमाउंट है, तो उनके लिए डेफिनेटली जो चर्न बाकी और ट्रांजैक्शन कॉस्ट है दैट विल डेफिनेटली कम डाउन, क्योंकि दैट इज डिपेंडेंट ऑन द AUM, बट दीज डीपी चार्जेस आर फॉर ईच स्टॉक, द
राइट,
नंबर ऑफ स्टॉक्स दैट यू सेल, तो दैट इज लाइकली टू इंक्रीज स्लाइटली.
स्लाइटली या।
But that is again, even if you account for the lower churn overall, even then your transaction costs should be lower now. But I can totally understand, because अगर आपके portfolios छोटे हैं तो that DP charges actually over the course of 1 year, it there's some leakage there. And that's why what we have been recommending is कि और जो हमारी cost भी है roughly 5,800 per year है, it will only make sense for people if you are able to scale up to about say 2.5-3 lakhs. Then it will really make sense for them. तो इवन देन अगर आप देखिए कि डीपी चार्जेस ऑब्वियसली स्लाइटली इंक्रीज हो रहे हैं, बट जो आपका ओवरऑल ट्रांजैक्शन कॉस्ट सब्सटेंशियली रिड्यूस हो रहा है। तो ओवरऑल अगर आप अपना रीबैलेंस कॉस्ट देखते हैं, विच इज इंक्लूडिंग डीपी चार्जेस एंड स्लिपेजेस एंड योर ब्रोकरेजेस, ओवरऑल दैट कॉस्ट वुड कम डाउन फॉर एन एवरेज पोर्टफोलियो। बट अगर आपका 1 लाख से नीचे पोर्टफोलियो, तो देन आई कैन डेफिनेटली इमेजिन कि आपके लिए थोड़ा सा उतना बेनिफिट शायद आपको ना मिले in lower transaction cost, but even for you it should not go up. और लेकिन आपके लिए cost anyways higher है, तो our recommendation is always कि go up to at least 3 lakhs or so to make sense of this fees also that you are paying.
Right. Okay. Then Pawan Kumar is asking that diversification is required to safeguard in current markets, but having 1% weights, which is not meaningful. Could you please provide any insights? There was another question where someone was asking that a lot of stocks have around 2% weightage in the portfolio. So can you explain why this is being done? Does it make sense?
See, what we have tested, I think I can just look at the data and answer that if we try to make this more concentrated in nature, what would actually happen is it's not likely to help too much in terms of returns, but our overall volatility of the portfolio would actually increase. But what we can do, Eesha, is maybe next time, I have noted down this point, and what we can do is we can actually share some more statistics from our back test to see, to explain maybe how a much concentrated portfolio in the newer methodology versus this higher diversified portfolio, what are the changes in terms of not only in terms of returns, but also in terms of risk. Yeah. So that is something maybe in more detail we can share more data with you definitely. So I've noted down this time, this point.
Makes sense, Vivek. Let's do that.
Yeah.
Lot of people asking the same question. Okay, so what is the recommended investment in small case in terms of percentage of total assets? Also, should one invest in one small case or multiple small cases?
So definitely you should not invest in multiple small cases. That's not what we want, because these small cases, if you see, they're just the equity equity part is exactly the same in all portfolios. It's just that how much of your money is allocated to equity versus how much it to debt. So in gear 6 it is 100% equity, versus in gear 5 it is 80% to equity, which is exactly same allocation in gear 6, but 20% of your money goes to debt. So it becomes more safer for you. So people who would not like to take more risk or are too concerned about these higher market valuations, maybe they can consider moving to gear 5 or gear 4, right? But we would never recommend you to buy two portfolios, because it really does not make sense. See, gear 4 and gear 6 is exactly equivalent to gear 5. That's what it is, right? So you can just figure out which is the best portfolio for you, not only in terms of returns, but also in terms of risk, and just invest in that one specific gear.
I think Vivek is also asking that by other small cases, maybe they mean other small case managers and the total, uh, how much Gulaq should be as a percentage of their total portfolio.
Yeah, so that we have, I think, what we maintain is that obviously there are few. I think I saw one question where that person wanted to invest everything, all the equity allocation in Gulaq, which we never recommend. What we say is that you divide your equity allocation uh, such that your allocation to any one manager or any one fund should not be more than, say, 25-30%. That's what our recommendation is. So overall, let's say if you have 10 lakhs, so maybe the maximum in Gulaq Gear 6 could be 3 lakhs, but that's the maximum that we recommend for any mutual fund or any other small case as well. So it's just to be diversified across managers and across strategies. That's a good practice. That's what we recommend.
And then Bhargav is saying, is there any chance that the algo might go wrong? In that case, what are your precautions to protect our investment from any wrong decision made by the algo?
Yeah. So I think it's a good question. Uh, The way I would answer this is, let's say, how do you define an algo going wrong, right? So last month we had negative alpha. So our returns in Gulaq Gear 6 were less than BSE 500 returns. Would you consider this as the algo gone wrong? I do not think so. So the way we define and we track this very closely month to month, what is happening with the algorithm. And the way we do it is not over short term, but over multiple time frames, what is happening. So what we the data that we have is, let's say, the current methodology, the new methodology over last 10 years, what has been the returns across multiple time frames. So from my backtest, what I know is in any 3-month period, what is the maximum alpha that has been generated versus the minimum alpha that has been generated. So let's say there would be many quarters where we are unable to produce alpha, right? Now in that worst of quarter, let's say worst of that 3-month period, what has been our worst performance as compared to the benchmark? So let us say if that is, say, 5%, just for this example, which means that if benchmark has given, say, 10% positive, we would be at 5%. So that's a negative alpha of 5%. Now, this is what we do track on a monthly basis to see how our algos are performing across multiple time frames. So across 1 month, 3 months, 6 months, 1 year, and more. So what this tells us is, if our algorithm, if our actual results are even worse than what were expected as per the backtest, then we figure out, or then we take a conclusion that yes, now something has gone wrong. as per the backtest, this has never occurred, and this is occurred now on the downside. Obviously, this has never happened till now, but that is one thing that we do keep a track of. This is what we call it as the cone of confidence, and maybe this is something that we can share with our users. So I'll definitely share this cone of confidence in our next webinar. How we actually track how our performance has been as compared to what is expected performance, right? So that's the cone of confidence, and I'll be happy to share it in our next monthly webinar.
Probably. So wait, one question which is very strange. Rajesh says your cost adjusted returns in the last 6 months is below benchmark while calculating for 3 to 5 lakh portfolio. Uh, can we check?
Sorry, our cost, what did you say? Our cost adjusted?
Cost adjusted return in the last 6 months is below benchmark for Rajesh for a portfolio of 3 to 5 lakhs, he's saying.
Okay, I'm just trying to look at, see, over last 6 months, the equity multi-cap has given about 117, whereas we have given about 123. So that's a difference of about 6%. Now, I'm not sure, as per our calculations and the way we track the slippages and we track the brokerages, obviously it could be because I think 6% is really high. What we expect over a year is maybe a gap of about 4 to 5%. But it totally depends on your brokerage and the time when you are rebalancing. So if you are on a full service broker, plus you're not rebalancing on time, then definitely this slippages could be higher. But if you rebalance on time, plus you are on a discount broker, then I do not think it should be this high. There's no reason why it would be about 6% in 6 months. So definitely these are high. I think what you should maybe, if you can write to us, share how when you have been rebalancing plus your brokerage plans, then we can look at it in detail and see what is causing these leakage in returns.
Right. So I think someone's asking us to tell the target return percentage each year in year 6. So what?
Sorry, Eesha, the target?
The target return percentage in year 6 each year. So what do we expect? Of course, we can't guarantee anything, but
yeah.
And of course, we see that in the past, the CAGR has been close to 50%, which is quite high. But what should an investor have as a realistic expectation from the product?
See, what I've been maintaining is I personally have invested in Gulaq Gear 6, a substantial amount. And my expectation is that markets over next, say, 10 years would give about 12 to 15% in that range. And these are my personal expectations. Obviously, if you look at backtest, the returns expectation would be very high. And I'll personally be very happy if we are able to generate about maybe 6% annualized alpha over next 10 years. So if market is giving, let's say 12 to 15%, I'll be very happy if I get 18% to 21% returns in that range. So roughly around 20%, I'll be very happy. And those are my personal expectations. Now it's up to you how you want to form your expectations. Because if, as I told you, if you just look at the back-tested results, then those numbers are definitely, they'll look very, very attractive. Most likely you will be disappointed. Yeah.
Right. Okay. So one question that we should definitely clarify, Nitesh Kumar is asking if we guys, because I am also an investor in Gulaq, Vivek is, Shalab is, all the people, I think the key people in our team are investors and we have all invested substantial amount in the portfolio. So Nitesh is asking if we get the rebalance update and we rebalance our portfolio before giving it to the public. So over here, I would like to clarify that we get the update from the algo, from the team that's creating the portfolios, and they run the algo only after market hours, 1 day prior to the rebalance update. So if we are giving it on the 1st and the 30th is a working day, so they will only give the update to us at around 5 or 6 p.m. in the evening. And we upload it on small case. So there is absolutely no possibility for us to kind of know the constituents for that particular month's rebalance and do the rebalance before you guys. So we also get the update on small case like you guys do. And at 9:15, I try my best in the morning that I'm able to punch in my rebalance update. Vivek, if you want to add anything.
No, I think that's what it is. That there is no chance that this can occur just because our rebalancing happens after the market close. And next day, when the market is opening at 9:15, that's the time everyone has that portfolio. So yeah, that's what it is. In fact, I know my rebalancing hasn't been going on time for last 2 3 times. On every rebalance, I have actually missed that whole day, and I've been able to rebalance only 2 or 3 days later. But yeah, really, that is not a possibility also, and we do have strict checks in place. But in this specific case, there is definitely not a possibility at all. So yeah.
Okay, so someone has shared that after accounting for all the charges, you would have made an 18.34% return on a total investment of 3 lakhs. This is what Zerodha is showing as cost adjusted returns for the last 6 months for a 3 lakh investment in Gulaq Gear 6. So he's just clarified this, I think, in response to Rajesh's question. And I think 18% is also above at least what the equity multi-cap index is giving. You know, equity multi-cap has given in 6 months around 17%. And mind you, that is also before adjusting for costs. So you see equity multi-cap, you will only be able to see the overall return, 17%. But if you actually try to invest, let's say in a small case that is constituted only with equity multi-cap stocks, again, there will be charges. So that return will also get discounted by the costs, transaction costs, brokerage costs, etc.
I think, Eesha, this is what we have been maintaining,
Yeah.
that in any active portfolio, obviously we have seen very good times, but this has happened in the past. This is what I've been saying since the beginning of the year, that we should be ready. We should always be, we shouldn't act surprised if any active portfolio, I'm not saying about ours, but any active mutual fund or any other small case, if they underperform for a quarter or 6 months. So that is definitely a possibility. Even in our back test, what we have seen is, at least the good thing is, over a year, we have never underperformed. But definitely there have been in the back test, there have been periods of 6 months where our portfolios have underperformed. So it's actually, equity investing is a long-term game. And we should be really very patient, although we kind of with all this news that keeps coming in, we tend to lose our patience. But the more patient we are with equity investing, the better our returns will be over long run.
Agree. Okay, so maybe Vivek, I'll take a pause here. We've answered a lot of questions. We can go back to the questions in our PPT, which people submitted before the webinar, and then we can come back to the questions from the chat.
Sure. Yeah, so you can see my screen? Okay.
Yeah.
Dr. Neeti has asked, I have invested 5 lakhs in Gulaq Gear 6 and plan to invest additional 5 lakhs over next 4 to 5 months. What is the tentative amount your fund might generate over a 5-year period? Could it potentially grow into a corpus of 1 crore? So, so overall, you would have about 10 lakhs invested maybe in next 4 to 5 months. The second part of the question is, could it potentially grow into corpus of 1 crore if you're asking in next 5 years? No, definitely not. I think 10 lakhs growing to 1 crore is 10 times, which over 5 years would be very high CAGR, maybe about 50-60%, something of that order. So I don't think that you should expect a corpus of 1 crore. As I told you, a good way to set your expectations is maybe take 18% as the annualized growth rate, and then calculate what you can reach in next 5 years. So take this 10 lakhs, and if you are able to grow at annualized 18%, that's what you should expect. Definitely not 1 crore. I don't think in any case it will grow to 1 crore in next 5 years. Yeah. What is the minimum and maximum suggested investment amount for Gulaq Gear 6? See, the minimum is about 3 lakhs or so, somewhere between 2 to 3 lakhs. 3 lakhs is pretty decent amount because our cost should be, our fees definitely should be about 2% or lower than 2%. So if you have 5,800 and if you have invested, if you're paying 5,800, invested 3 lakhs, so it will come out to be below 2%. So I think 3 lakhs is kind of, you obviously the minimum you can start is with 24,000, but what we recommend is about 2 to 3 lakhs, in that range. Definitely you should try and scale up as soon as possible. The maximum, I would say, see, what I have seen is there's a lot of slippages uh, because the execution through small case is not very efficient. Uh, and that's why the maximum we suggest is maybe about 10-15 lakhs. Above that, the slippages would be higher. That's the only thing. Otherwise, everything is okay. And if you have maybe closer to 50 lakhs, then what we strongly recommend is that you look at our PMS, because in our PMS, we take the responsibility of execution, and our execution algorithms are quite advanced, so that the slippages that you get would be bare minimum, and also there's zero brokerages in our PMS. So if you are closer to 50 lakhs, then you can actually consider PMS, and minimum would be about 2 to 3 lakhs. Besides the minimum, how much is the recommended? I think the recommended, obviously, the minimum is 24,000, recommended is about 3 lakhs. Yeah. Okay. There's a lot of discussion about market correction since market is at all-time high. Should we adopt a more conservative approach in such situations, or focus on analyzing the fundamentals of the stocks? This is asked by Santosh. So Santosh, the second part is whether you should focus on analyzing. That is something that we don't recommend. We all have our own daytime jobs. Some of you are doctors, engineers, data analysts. So, so analyzing stocks is a full-time job, and even then it is quite a hard job, right? So I would never recommend anyone to select stocks on their own. Most of the people who do that, most, not all, but most of them who do that tend to underperform the market, right? So if you really do not trust anyone, the best way to invest in the markets is through index funds. And the first part is that should we adopt a more conservative approach? Santosh, so it depends on your goals, actually, why you are investing, and also on your risk profile. So if your risk profile is not very aggressive, then yes, you should have a more conservative approach. If your goals are not too far, so if your goals are maybe within next 2 to 3 years, for that, if you're investing, then definitely you should have a much more conservative approach. But if you are overall quite an aggressive investor, and you have at least, let's say, next 5 years or so that you can stay invested, and this is for equity investments in general, not specific to our small case. So you can stay invested if you are slightly longer term investor, if you have more than 2-3 year kind of time frame, and your risk profile obviously has to be matching with this portfolio. If you are not as aggressive, then maybe you can consider less aggressive approach, which is, say, Gulaq Gear 4 or 5 or 3. Yeah. Next, Dinesh has asked, which is better for better returns, lump sum or SIP? Again, Dinesh, in this, there's no clear-cut answer. If you have the money, obviously lump sum would be better, but there are pros and cons. A much better approach, which I've seen, is obviously systematic investment plan. But if you just ask me mathematically, which is a better approach in terms of returns, lump sum is a better approach. because equity markets over long run has an upward bias. So if you are just waiting for markets to correct, that is never a good approach. Lump sum is a much better approach just in terms of uh, if you just use Excel to decide. But obviously, we can't do that because we have our own emotions and our own psychology, right? So, if you consider all of those things, definitely SIP is much better for most of the investors. It's a much better plan. Uh, yeah, that's what it is. See, the problem with lump sum is uh, obviously markets have upward bias, but the problem is if the market's correct, most of us are not prepared for that. And if you have invested in the markets and then markets correct 5 or 10%, you are then most of us will actually kick ourselves as to why we invested lump sum. We are not comfortable with that kind of risk and that kind of decision, right? And that is why mostly I recommend SIP. That is a much better approach. Yeah. So, question from Prateek. I am shifting my individual shareholding to Gulaq Gear 6 with a time horizon of 5 to 10 years for my retirement. Is this then ideal corpus size that I should aim at to invest and build over the next couple of years? Uh, so, Prateek, I think if you are asking in terms of retirement, if there's an ideal corpus, there's not an ideal, there's no specific number. It totally depends on your requirement. So there's in retirement there's a very famous 4% rule, what that states is whatever portfolio you have, you can safely withdraw from it about 4% every year. So if you have a portfolio size of 1 crore, you can safely withdraw 4 lakhs every year from it, and you can continue this for 10, 20, 30, 40 years. You can continue doing it because the growth in portfolio is actually much more than 4%. That's what it does. So it depends on you. If you have, let's say, on overall around 12 lakhs of requirement, then it becomes 25 times of that, which is about 3 crores. So that's a general rule of thumb. Secondly, having everything invested in Gulaq is definitely not something advisable. So you should distribute it in multiple funds, and in any one fund, don't have more than say about 25%. That's the general rule of thumb. Somewhere around 20 to 30% is fair. So that's what you should consider. Your question two is, are there any stats on ideal time to execute a rebalance? For example, should it be done immediately at market open, anytime during the day, or next day to minimize price impact? So what we have seen, Prateek, in this case is that day and over next 2 days, there's no significant difference in terms of the returns. But uh, if you delay your execution more than 2 days, then definitely it impacts your overall returns. That is one thing. Second thing is, if your portfolio is small, then markets are liquid enough any time of the day. But if your portfolio is slightly large, then most of the liquidity is in first 1 hour and last about 1 hour or so. So if your portfolio is slightly large, then maybe I would recommend that either do it in first 1 hour or in the last 1 hour, but not exactly at the time of open, because at market open there is not enough liquidity. So what I recommend is wait for a couple of minutes and then start your rebalancing. So maybe 9:20 would be fine, but immediately at the time of open, if you are rebalancing, uh, some of the stocks might not have that kind of liquidity, and there might be higher slippages in that case. Yeah. Next, Yudhir is asking, is it advisable to rebalance on the same day or wait for a few days? Yeah, so this I have already told. The pattern is that within 2 days, if you rebalance, then there is no observable uh, difference in returns. But after that, definitely your expected returns come down. So we have seen this. We have did a study. It's been some time, but that was the conclusion from that study. Okay, Pankaj is asking, the long alpha PMS strategy utilizes diversification across 80 to 100 stocks as an alternative to hedging? Wouldn't incorporating hedging with FNO further enhance risk management? So, Pankaj, there, there are multiple ways to go about managing the risk of your portfolio. One of the way is using options. And if you're using options, then you have to have some systematic way of figuring out now the markets are overvalued. I want to hedge versus now I want to, if they are undervalued, I want not to hedge. Because if you're always hedging, there's a cost attached to it. So if you're always hedging your portfolio, then your returns are going to be lower because you're paying that cost to hedge. So you'll have more stable returns, but slightly lower returns because you'll be paying some cost in hedging. Whereas if you're not always fully hedged, which means you have to take this call of when the markets are overvalued versus undervalued, you have to have a very strong system. And in our experience, that to predict whether the markets are undervalued, overvalued over short term, it's a very difficult task. So this is something that we have tried in the past, uh, and we don't think it works. Maybe there are people in the industry who are able to do it, but we believe it's a very difficult thing to do, and there's a cost attached to it, and that's why we do not use options to hedge our portfolios. And the second thing is, having said that, it's not that there is no risk management in our portfolios, because what is happening is uh, we are considering the market regime that we are in, and based on market regime we take risk. Based on these market regimes, the factors get selected. So if the market regime, if the algo recognizes that this is not the most optimum time to take high risk, then what it would suggest is you shift to safer factors, which will in turn lead to safer stocks getting selected in our portfolios. So that's how the risk management actually happens. And you would see that over the course of few years, whenever markets are kind of bit more volatile, then we actually shift to safer stocks. So this is actually anyways happening in our portfolios, that kind of risk management. But yeah, we do not take any short-term directional call or do hedging through FN.
So, Vivek, one
Yeah,
follow-up question on what you just mentioned. So, are we saying that the 1% weightage or the low weightages that are given are also a move in the direction of risk management? So, that would help in managing the risk of the portfolio in case the market comes down. Is that correct? Is that understanding correct? Because I did get those questions. Lots of people are asking why
yeah.
there are lots of stocks with just 1 or 2% as the weightage.
See, that's the. I think we should wait definitely for more data. I'll come back with more data on this to explain it better. Because at the end of the day, what we have done is we have seen it in our back tests. That is what it works well, and we have seen it in live markets in PMS. That this strategy actually helps us generate better risk-adjusted returns. So the reduction in risk is not really that much as compared to the old portfolio, but the improvement in returns is substantial, and which is quite surprising for anyone. Seeing that earlier you just had a concentrated portfolio of 12 stocks, now you're going to 36 stocks, and you're saying that the returns would be higher. I can imagine most of the people getting surprised by this, but this is actually the case, and this is what the improvement uh, has been. It has been a major improvement. But let us, Eesha, let's do one thing. Let's get back with more data so that we are able to explain people uh, uh, in a better way.
Yeah.
So I think that should definitely help everyone. Uh, so yeah, let us get back with more data on this.
And like you said, it's a little counterintuitive. And I am also I think almost 1/3 of my total assets are in Gulaq. So I should be worried too. Now looking at all the questions, I'm thinking, hey, why am I not so worried? Maybe because I'm closer to the team and I trust the team more since I'm part of Gulaq. And the
Yeah.
people who are from outside, they don't see the way we work, the kind of people who work here. So that's why the trust is less. But looking at all the questions, I'm thinking, hey, why am I not so stressed? Because 1/3 of my money is in Gulaq. Okay.
No, definitely. I think these are some very relevant questions, and we'll definitely get back with more data, more explanation on this.
Hmm.
Uh, but having said that, again, I want to, the whole point is I want to convince you that this is not something which is just in the back test. We have been using this internally in our PMS algorithms. This methodology is actually making our portfolios better in every sense, be it in terms of risk, returns, or slippages or the transaction cost. So this is a very well thought out plan of rolling it out in Gulaq portfolios, and we'll definitely be more happy to share more data with everyone.
And I think the benefit is that since it's monthly rebalancing, we can always see how it goes, because we are certain that this would go well. But
Yeah. So Isha, there I disagree. Uh,
okay.
like uh, like I said earlier, that it's hard. It's almost impossible to judge an active portfolio just by looking at 1 month or 3 month returns,
Hmm.
right? So just by looking at 1 month returns, I do not think anyone will be able to make out it is working or not, right?
Definitely.
And that is why I say ki we have been seeing it in live markets, how it has been performing with actual money in PMS over last more than 1 year actually, right? So that is the proof in front of us.
Hmm.
Obviously, we internally have seen that proof. I can imagine that people outside obviously haven't seen this in actual work, and that's why they have these questions. But yeah, 1 month or 3 months would not tell you, even if this performs very well or does not perform, it won't really tell you anything
Exactly.
in such a short duration.
Yeah. I think Vishal is also saying that please share the backtested results of strategy performance in last 20 years or so, and also the maximum drawdown and other statistics. So,
So, Vishal, what we do is see the kind of data we are using. We do not have the data for all the stocks for last 20 years. The data, the good quality data, and the data that we use, we only have it for about 12 years, right? So, so definitely, we will share the back-tested results also with you on a much longer time frame, along with the other parameters like drawdowns.
and a follow-up question from Vishal is that will most of the companies, most of the stocks stay in the portfolio for a year for taxes? I think,
No, Vishal, so that won't happen. Okay. So most of our uh, profits would come under STCG category only. And this is something that we have seen, Vishal. We have tried to tweak our algorithms, our methodology, so that it holds stocks for much longer, so that a big part of our profits come under LTCG, right? But the downside there is that the overall alpha reduces. So if you are not, let's say, rebalancing monthly, we are doing it once a 6 months. So there's a good chance it actually happens that your PNL is under LTCG, but overall there's a good amount of reduction in alpha, right? So what we are here measuring is not the returns, but uh, the returns post slippages and post taxes. We want to optimize or maximize that thing, right? So this is in our current methodology. That's what we are doing. We are trying to maximize the returns post taxes for you. So if we hold it, that really won't work as well as this strategy.
got it. So I think, okay. Someone's asking if they're planning to subscribe. Where can they find the best coupon? I think, yeah, Vivek, do we have any offers running right now?
We might have. I think you can talk to our customer care team to see if there's anything which is currently available. So yeah, check out with our customer care team.
Uh, then we have lots of other questions. Some again questions on why do we have so many stocks. So I would urge you to rewind the video. This is available on YouTube. It stays here. We'll be able to see We've explained everything in a lot of detail at the beginning. I think around the 10 or 15 minutes mark. We have explained all the reasons of what reasons and the questions we have addressed related to the upgradation that we have done in our portfolio. I think, Vivek, we can stay back for a few more minutes to
Yeah,
get
sure.
questions.
Definitely. Yeah.
Sure. Okay. So Neeraj is saying that last 3 years since we rebalanced, it washed away the entire August month profit, even when the market is not falling. How can we remain confident?
Sorry, can you repeat, Isha? I did not
Sure.
get this question last.
Sure. So he's saying that in the last 3 days, uh, after rebalance, it washed away all the August month's profit. So why would this happen? And
Yeah, see, Isha, I just answered. See, even 1 month, 3 days is just it's random noise, right? Even a month is very small time frame to judge a strategy like this. So when we rolled it out, we haven't rolled it out based on 1 month data or even just backtest. We have been obviously doing these back tests, but we have also implemented this strategy in live markets in PMS, and we have seen it work better than the older strategy over last 1 year in live markets. That was the expectation that has actually happened. So I think again, I would want everyone here to be more patient with this. Even 1 month is very small time frame to judge a strategy. So I'll never recommend you to invest in a strategy just by looking at 1 month return. I'm sure you would not have invested in Gulaq Gear 6 just because of 1 month return, right? So to make a call whether the strategy is working or not based on 1 month data is not right.
right.
Yeah.
Okay. So Vivek, Rahul says, does momentum as a factor always work in the market?
So not always, but yes, that is one factor that historically has worked very well. In fact, that is one of the best factors. But why we don't rely only on momentum is because there is risk. If the markets start correcting, the momentum factor gives very sharp corrections also, much higher than the markets, the overall broader markets. So if the markets fall 20%, there's a good chance that momentum strategy might fall by 30 or even 40%, right? So a much better strategy to invest over long run is this multi-factor strategy, where we figure out that if momentum is not working, that's what has happened in the last 2, 3 months, that we have shifted to quality. So we keep on shifting, right? So that is much better strategy. But if you just have to pick one strategy, obviously it is momentum, but it's not the strategy that always works.
Understood. Okay. Um, we have a question about the PMS. How can we get the PMS service and whom to reach
So
out?
yeah, so if you go to gulaq.com, there's a section, a tab on PMS. So the actual link is also pms.stadvisors.com, or you just go to gulaq.com and there you'll find details about our PMS, also the phone number, or you can leave your details and we'll call you back.
Okay. Nitish is asking, which debt do you use in Gulaq Gear 4? I want to reduce my risk. I am a Gear 6 subscriber.
Yeah, so these are unfortunately in ETFs, we don't have too many options. So one of the best options is Bharat Bond ETFs. So that's what we use to take exposure in debt.
Okay. सर क्या पीएमएस और गुल्लक की मेथोडोलॉजी सेम है?
Yes, now it has become exactly the same. Only the last part जहाँ पे हमारा डाइवर्सिफिकेशन, क्योंकि उसमें ऑलमोस्ट 80 to 100 स्टॉक्स होते हैं, उसमें एक्चुअली देयर द मिनिमम इन्वेस्टमेंट इज 50 lakhs, right? Here most of our investors are at around 2 to 3 lakh. That's the average. Okay, so obviously there's a small difference, but broadly it is exactly same.
But the way to you're saying the last part will be different because we have to create a portfolio which has a
Yes,
small ticket size, and our ticket size is not changed. Just to clarify, because there were questions that since you have
exactly.
increased the number of stocks, is ticket size increase? But that's not the case. That's where the real difference and the difference in the algo lies. That we try to make a portfolio which is suitable for 24,000 minimum investment also in Gulaq. Okay. So Prashant, we've already answered as to why there are 28 stocks this time. Request you to rewind the video. This will be saved. In the first half of the video, you will have all the answers about why the number of stocks have increased and the associated questions. Okay. Okay. So someone's saying, how long do you plan to run Gulaq Gear 6? And do you have plan to launch any other small cases with different strategies?
How long do we plan to run? I think we'll run it forever, right? So, and the second part is, do we have any plans? So, see, we do not have any plans as of now, very concrete plans. Obviously, we'll be coming out with mutual fund advisory. That is something that we'll roll out pretty soon. But in terms of where else we can help you in terms of creating these portfolios, maybe we can ask people here only what else they'll be interested in. Yeah, what kind of maybe portfolios they want from us. So if you can maybe just in the comment section only, if you can write down what kind of portfolios you want, and then we can yeah, that will be a good feedback for us, because as of now we do not have any concrete plan to launch.
Yeah, that's a good idea. I think we can do that. Then Arun is saying that he's new to Gear 6 and would like to know the best way to invest. He has invested 1 lakh so far and is planning to add 25,000 per month SIP for a long term. Is this a good strategy?
Yeah, I think Arun, a SIP strategy is pretty good for you. Yeah, just consider that you are fairly diversified in terms of where all you are investing. And definitely, I think one thing that most of the people miss when they start investing is uh, taking a risk profiling survey, which we also have on Gulaq. That is, I think, quite useful. It gives you some indication about how aggressive or conservative you are as an investor, and accordingly, how much of equity and debt you should have. I think those are definitely very important points for you to consider. So if you haven't thought about it, I think those are the things that you should also consider. Otherwise, the SIP approach is pretty good.
So another question, since there is a change in the algo, are you considering going into cash in drastic volatile situations?
No, we see there has to be very systematic way of doing it, right? And as I've told you, we haven't been able to figure out a very good systematic way of doing, rule-based way of doing it, uh, because that has to add to the strategy over long run, right? अब मैं इसमें ये नहीं बोल सकता कि एक बार मैंने ये कॉल लिया and it worked out, so I'm good at it. So we are not good at it, right? What we are good at is using data to create rules for investing. That's what we are good at. That's where our strength lies. So we will never, you really don't want us to do anything that we are not good at, right? So if we are able to figure out a way to actually move to cash and then back invest, definitely we'll do it. But it has to be in a very, very structured, systematic, rule-based approach. It cannot be ad hoc कि आज मेरा को मन कर रहा है, मेरे को इस न्यूज से बहुत डर लग रहा है, and that's why I want to shift to cash. We'll never do that.
Okay. So Captain Hemant Kumar says my Google form questions were not taken. Of course, there were more than 200 questions, so we had to just select the questions that were different or were repetitive. And he says that his email was not replied to. That is strange. I will check if we received any email from you. But you can reach out to us on the support phone number. You can find it on our website. Also,
Yeah,
regarding the email, it is support@gulaq.com. So I hope you've emailed to the right address. But I'll definitely check if any email was received from Hemant Kumar with our customer support team, and we'll get back to you.
yeah, sure. I think this is something definitely we'll check. The reason could be, again, I'm not trying to give excuse here, but last few days, in fact, first few days of every month are really very busy for us. A lot of customers write to us or even call us. So it could be possible that we missed out, but definitely we'll go back and look into this email and reply.
Yeah. We'll be clearing all. If there is any backlog with the customer care team, we will be clearing all of it. So be rest assured, we will be replying to your email. And if there is anything urgent, you can always give us a call. The number, as I said, is present on gulaq.com. You'll be able to reach us. Reduce. Yeah, so Srinivas says in the last 3 to 4 rebalances, I have noticed that small case asks to add more funds, even if the cost of the buy order is less than 80%. That would be received from the sell order, which means that that he's basically unable to go through unless he adds more funds. That is very true, Srinivas. I myself am also an investor in Gulaq Year 6, and I faced the same problem 3 months back. So we also heard from our other clients over email about this issue. So we did raise it with small case. We have had detailed, thorough discussions with them. Now, this is a change from small case side. And what they do is that on every rebalance, they will ask if there are no funds lying in your Zerodha account, they will ask you to add 0.5 to 1% of the funds. Now the exact percentage small case will be able to tell you better. It's a platform side change that they have done. The rationale being that on the first day, you may still be able to rebalance because like you said, the amount gets credited, at least 80% of it. But on the next day, the balance 20% rebalance does not go through because sometimes the prices of the stocks we've recommended go up. So next day you are unable to buy those stocks because the price is higher. So they see that rebalance remains pending. The repair orders remain pending for a lot of people. And what they have observed after testing is that by doing this change, they are seeing a higher rebalance rate. So people who are already rebalancing, like maybe you and myself, there's no real benefit to us. But for people who have not been rebalancing timely, this is like a move from small case side to ensure that rebalance is complete for all the people. So this is a kind of I know it seems like an hindrance, but this is a change at small case side, which is applicable to all portfolios, to all small cases that are present on the platform. So that's just a new feature that we have to live with. I hope I was able to explain the rationale to you. Okay, let's look at more questions. Okay, Vikas says, what will be the difference in the CAGR returns of year 6 and ST long alpha PMS portfolios over a 5-year period? Which of the two will give higher returns? Vivek.
So over last 12 years, as per the backtest, what we have seen is there's a difference of about 2 to 3%. So in Gulaq, by the way, this is the older methodology. With newer methodology, I'll need to come back to you on this. But with the older methodology, there was a difference of just about 2 to 3% between PMS and Gulaq Gear returns, Gulaq Gear 6 returns. So that is as per backtest. Now, there has been years where Gulaq has done much better than PMS. The difference has been much higher than that 2-3%. And also there has been years like last year, like last 12 months, where PMS has done better than Gulaq. But overall, if you have to ask me my expectations, I would say maybe about 3% annualized. We should see Gulaq perform better, but at the same time, you are taking slightly higher risk because it is obviously more concentrated as compared to PMS, and they slide some cost in terms of your slippages because that's not very efficient in the execution is not very efficient on small case, whereas on PMS it's very efficient. Yeah. But that's the difference I would expect of that order.
So next question, Vivek, you already answered it, but since it's in Hindi, हम हिंदी में भी answer कर सकते हैं. So someone saying कि हम retail investors को कितना CAGR की expectation रखनी चाहिए in 20 to 30 years?
I think मैं पहली बार ईशा सुन रहा हूँ कि 20 to 30 ईयर टाइम फ्रेम. मेरे को लगता है कि ये बहुत बड़ी एडवांटेज है अगर कोई डेकेड्स में सोच पाता है, बिकॉज मोस्ट ऑफ अस हम सोचते हैं एक महीने में क्या हो रहा है हमारे रिटर्न्स को, या एक क्वार्टर में, या एक साल में. तो आई पर्सनली फील कि अगर ये जिसने भी ये क्वेश्चन पूछा है, अगर ये कोई भी सोच पाता है डेकेड्स के टर्म्स में, तो उससे बहुत बड़ा एडवांटेज ये होता है कि हम जो डेली बेसिस पे नॉइज होता है मार्केट में, हम उससे ऊपर उठ जाते हैं. बिकॉज वो हमें लगता है कि अगर मैं 10 साल का व्यू ले रहा हूँ तो ये हार्डली मेरे पोर्टफोलियो को इम्पैक्ट नहीं करना चाहिए. आई थिंक दैट इज अ वेरी गुड अप्रोच इफ समबडी इज एबल टू टेक दैट, और बहुत बड़ा एडवांटेज भी है उसके लिए. और जैसे मैंने बोला कि आई थिंक ओवर लॉन्ग रन विच इज 20-30 ईयर्स, अगर आपका पोर्टफोलियो 12 to 15% रिटर्न दे देता है, इररेस्पेक्टिव ऑफ कि आपके पास गुल्लक है या म्यूचुअल फंड्स है, आई थिंक बहुत सॉलिड रिटर्न्स हैं. अगर आप कोई भी आप कैलकुलेशन कर सकते हैं कि सिप अगर आप करते हैं किसी भी एक अमाउंट की 30 ईयर्स के लिए, तो बहुत ही सब्सटैंशियल आपका फंड बन जाएगा. क्योंकि कंपाउंडिंग एक्चुअली, जो कंपाउंडिंग का एक्चुअल इम्पैक्ट है, दैट इज ह्यूज इन टर्म्स ऑफ 20-30 ईयर्स. तो आई थिंक वो रिटर्न से ज्यादा हम सबको यही सोचना चाहिए कि अगर हम 20-30 ईयर्स का व्यू ले पाए एक तो, और प्लस बहुत डिसिप्लिन तरीके से अगर हम इन्वेस्ट कर पाए एवरी मंथ, द नंबर्स वुड बी ह्यूज इवन एट 12%. ठीक है. और 12 का अगर वो 15 हो पाता है, 18 हो पाता है, विच इज वेरी वेरी डिफिकल्ट. 5-6% का अल्फा जनरेट करना ओवर 30 ईयर्स, इट्स क्वाइट अ डिफिकल्ट टास्क. वेरी फ्यू फंड्स globally have been able to deliver that, right? So even at 12%, this is very good returns. So that's what I have to say. Yeah.
Okay, now Prashant is saying that he's invested 35 lakhs and the return in last 6 months is only 14%. I think we should definitely urge Prashant to send his details to us and investigate this, because 22% are the actual returns. For a Zerodha client, the person said on a 3 lakh portfolio, they could see 18% plus returns. So Prashant, of course, there are a few things. One is slippage, the other is rebalancing on time. So, we'd urge you to see if you were able to rebalance on time on in most of the months, and whether you're on a full service broker or on a discount broker.
But
And if
I
there,
think,
yeah.
Isha, there is third point also to this, which I forgot to mention. The
Mhm.
third point is also कि how are you investing? So many people, what they do is, most of the people are doing SIP.
Yeah.
तो अगर जैसे 35 lakhs इनिशियली आपने मान लीजिए 20 लाख से स्टार्ट किया था, एंड दिस 15 lakhs you have invested over the 6 months, then obviously आपका जो इनिशियल इन्वेस्टमेंट अमाउंट था उस पे वो 18-20% रिटर्न्स रहेगा. बट जो आपने लेट्स से 2 महीने पहले पैसा डाला है उस पे आपका 18-20% नहीं आएगा. तो ओवरऑल फॉर द होल पोर्टफोलियो दोज रिटर्न्स वुड डेफिनेटली बी लोअर, क्योंकि आपने पूरा पैसा एक टाइम पे स्टार्ट नहीं किया है. ओवर द लास्ट 6 months यू हैव बीन इन्वेस्टिंग. सो इफ दैट इज द केस, जो कि बहुत ज्यादा लोगों के साथ होता है, कि हम यही मिस्टेक कर देते हैं कि हम एक्चुअल देखते हैं कि 6 months में इतना रिटर्न आया बट मेरे पोर्टफोलियो में नहीं आया. तो वन ऑफ द मोस्ट कॉमन रीजन इज ऑल्सो कि वी हैव बीन इन्वेस्टिंग, if somebody has been investing over the last 6 months, putting in money at different point of time, then definitely it won't be whatever 20, 25 या 18 जो भी number है, it won't be that. It will be actually be lower.
Yeah. Yeah.
That is another common reason why
Yeah. Yeah.
people see the
Very,
difference in returns.
that's a very important reason, which is why XIRR, which is the time weighted rate of return, is looked at. लेकिन small case ये जो return है सिर्फ 1 year plus period पे ही XIRR provide कर पाता है. So if you will see, if you are an investor since the last 6 months, you will see a blank in front of XIRR. But XIRR would show the true representation, and I'm sure it would be much higher. If the actual returns are 14 and you have done a SIP, then definitely that makes sense. Okay, I think let's take another question. Okay, this question from Bharat Reddy has been repeating. He says Nestle percentage reduced to 12.5%, which means that we need to close extra weightage given last month.
Sorry, Eesha, can you please repeat? I did not get this question.
Yeah, so Bharat Reddy says Nestle percentage reduced to 12.5%, which means that we need to close extra weightage given last month. I think he's simply saying that since you've reduced the Nestle percentage, uh,
Hmm.
it means that we'll have to sell out the some of the stocks. And that's completely fine, right? Because our algo, I think he's asking why we did it because earlier we bought it and now we are selling it. But that's what churn really means, and that's what is done based on the recommendation of the algo. So I think he sent that question some 5 to 6 times. So I wanted to just
Okay.
pick it up.
Yeah, but that should be taken care of in the rebalance, I guess. Yeah, we
Yeah.
don't need to do anything separate for that. Yeah.
Okay. So Prashant has clarified, Vivek, that it was a one-time investment of his of 35 lakhs.
Yeah.
And
Then,
he's
yeah.
done rebalance in time. So then we should definitely investigate why that happened, right?
Yeah, Prashant, if you can really get in touch with us, we would definitely like to see why this would have happened,
Hmm.
because ideally it should not happen.
Hmm.
Yeah.
Right. Okay. So Vivek, just okay. I saw a message from your account, I believe. I think your son or daughter is saying that, hi, you're doing good.
Okay, okay. So they're waiting for me at home.
Acha,
Uh,
okay.
yeah.
Yeah.
So,
So that was a way
so
for them to talk to you. So you just said, hi, you're doing
yeah,
good.
so they because they watch a lot of YouTube videos. And when I tell them that I'm on YouTube, they always ask me how many million subscribers I have. And when I tell them there are few thousands, they really get disappointed.
Oh, then we should get more subscribers, right? We should urge the audience that the kids should not get disappointed. We should have more followers. Okay, so on that note, maybe Vivek, we can take one last question and then we can close the webinar. Um, so someone's saying that now when the small STCG is increased to 20%, do you think you will be able to generate the alpha to beat the strategy which produces LTCG gains?
Yes. So the strategy that we have internally, the same strategy, as I told you, we tried to uh, see how this will actually, what kind of results we'll be able to deliver. Not only alpha, but post-tax returns, right? Because alpha ke baad you need to pay out those taxes.
Hmm.
And the conclusion that we reached is this current strategy, even after paying higher STCG, we are because we are able to generate much higher alpha. This sticking to this makes more sense as compared to moving to a strategy which just rebalances once a year. Because उसमें obviously returns भी कम हो जाएंगे. There'll be lower taxes, but the returns will also be lesser. So this is actually the strategy where people should expect higher post-tax returns as compared to what we have. Obviously, there might be some other strategy which is doing long-term and which might yield better tax-adjusted returns. But what we have currently in this strategy, uh, rebalancing monthly makes more sense.
Okay, Vivek, one last question. I think
Yeah.
the account handle stock market Dost has asked me multiple times to take this question.
Yeah.
He says that the same person who was saying कि 20-30 ईयर टाइम होराइजन तो वो कह रहे
Yeah.
हैं कि उनकी एज 21 है इसलिए वो 20-30 ईयर्स का के लिए सोच पा रहे हैं और वो गवर्नमेंट जॉब में है
Hmm.
उन्हें नेटवर्थ जनरेट करने के लिए कितना अमाउंट इक्विटी मार्केट में इन्वेस्ट करना चाहिए फॉर 20 to 30 years?
Yeah. See, net worth is dependent on few things. Obviously, the time that you stay invested, which is very good in your case, 20 to 30 years. And second is how much money you put in. Now, इसमें what I see all around is आई थिंक बहुत एक्सट्रीम व्यूज को ज्यादा एक्सट्रीम ओपिनियंस को ज्यादा व्यूज मिलते हैं, इन द सेंस कि एक एक्सट्रीम ओपिनियन है कि ट्राई टू इन्वेस्ट एज मच एज पॉसिबल। अभी एक बहुत पॉपुलर मूवमेंट है फायर, इन विच दे से कि इन्वेस्ट यू डोंट बेसिकली इन्वेस्ट एज मच एज यू कैन, और आप बिल्कुल भी एंजॉय मत करो। और दूसरी साइड दूसरा एक्सट्रीम है विच इज ऑल्सो नॉट गुड इन माई व्यू, कि यू आर नॉट investing at all and just spending money. So I think a balanced view is very good. That's what we all should try and follow. That obviously, if you have money, 21 is a really nice age to enjoy, to go out and enjoy things also. But at the same time, if you can start investing at this age, nothing like it, because compounding, the effect of compounding will really kick in 5-10 years time, right? So I think I do not have a number for him, but just the approach, that a much balanced approach is the ideal approach in my view, right?
Any percentage of total income that you can say for a
I think
person
it's
who
very
does not
difficult,
have
Isha,
liability?
because personal finance may I really cannot comment. See, there are, I have seen on internet people suggesting anywhere between 30 to 60% in that range. But I think it depends a lot on quite a few things as to what kind of money you are earning. So it could be, say, 20,000. It could be ki you're just able, as of now, able to survive whatever expenses you have, after whatever needs you have. Rather, after that, you are unable to save much, or you have your financial obligations towards your family or other things, right? So there are a lot of variables in this thing. A broad range, which is 30 to 60%, is pretty right, but because it's personal finance, everyone has its own story going on, and that's why it's very hard to tell without knowing more one specific number. But in that range, I think broadly, if it is between 30 to 60%, is pretty good.
He's saying his saving is 60% monthly. So I think
Okay,
that
so that's pretty high. That's pretty good actually.
yeah.
Yeah,
Depends if there are no liabilities, there are no
exactly.
expenses you have to incur for the family. So then as much as possible is always great. And okay, so QA Fox handle says that he or she has subscribed to our channel. Thank you so much. I think we never ask people that we should do that. We should request all our investors and other viewers to also subscribe to Gulaq channel on YouTube and
Okay, yeah,
Instagram. You check out our Instagram page. We put a lot of reels by Vivek, by Sandeep, who's our founder. I also pitch in at times. So we keep sharing a lot of content everywhere. So please do subscribe. And on that note, Vivek, I think we can call it a day. Yeah.
thank you.
Close the
Thanks a lot,
webinar.
Isha. Thank you, everyone.
Okay, thank you. Thanks, Vivek. Thanks, everyone, for joining.